If you've got bad credit in the USA, you already know one painful truth. Car insurance can feel outrageously expensive. In fact, according to recent data, drivers with poor credit pay over 100% more on average than those with excellent credit. That means if your neighbor with a great score is paying $1,500 a year, you could be paying more than $3,000 for the exact same coverage. But here's the good news. You still have options. You don't need to waste time with companies that overcharge you just because of your credit history. In this video, we're going to break down the top 5 best car insurance companies for bad credit drivers in the USA. We're not going to overwhelm you with dozens of names. We're going to give you the standouts so you can choose wisely. And before we dive in, make sure to check out the exclusive links in the description below. You'll find special offers and discounts you can't get anywhere else. Let's get into the top 5 companies that are standing out right now. When it comes to affordability, Geico is a leader for drivers with poor credit. Geico consistently offers some of the lowest average rates, even for high-risk profiles. They also provide accident forgiveness after 5 years, and you can add extras like roadside assistance and rental car reimbursement. The advantage of Geico is that their policies are available nationwide, and you can manage everything online easily. Another big plus is their wide range of discounts. Multi-car, safe driving, military, and even federal employee discounts. This means that even if your credit isn't great, you can stack multiple discounts to bring down your rate. The downside is that Geico doesn't offer gap insurance, and their customer service ratings aren't always the best compared to competitors. But if your number one goal is to save money with bad credit, Geico is a strong choice. Check the description below for exclusive car insurance links. Next up is Amica, which is best known for its incredible discounts. While their base rates can sometimes be higher than Geico, Amica offers up to 18 different ways to save. If you bundle your home and auto insurance, you can cut your premiums by as much as 30%. They also have perks for homeowners and for cars with advanced safety features. The standout benefit here is that Amica actually ranks among the top for customer satisfaction according to J. Power. For bad credit drivers, Amica's average rates are 30% below the industry average, which is a big win. The con is that Amica has recently switched from 12-month policies to 6-month ones, which can feel less convenient, and their base rates are sometimes higher without discounts. But if you're someone who qualifies for multiple savings programs, Amica could slash your costs. Now, if your driving record has more than just bad credit, maybe tickets, accidents, or even a DUI, First Acceptance might be your best bet. They've been around since 1969 and specialize in covering drivers that most big insurers shy away from. The big advantage is that they'll insure you even if other companies turn you away. They also offer State Route 22 certificates if you need proof of financial responsibility, which could be a lifesaver after major violations. They even have flexible payment schedules, which helps if money is tight. The downside is that First Acceptance is not available in every state, and they've had a higher than average number of complaints compared to larger insurers. Still, for high-risk drivers with bad credit, they're one of the few companies willing to provide coverage when others won't. Dairyland has been insuring high-risk drivers since 1953 and specializes in drivers who have accidents on their record. They're available in 38 states and even offer some unique products like non-owner car insurance, motorcycle coverage, and limited Mexico coverage for California drivers. The advantage is that Dairyland has more flexibility with high-risk profiles, and they're known for offering State Route 22 certificates as well. They also have a lower volume of complaints compared to some competitors. The con is that Dairyland is not nationwide, and their premiums can still be higher than average. Discounts are also limited compared to companies like Amica or Geico. But if you've had an accident and your credit score isn't helping, Dairyland could be the right fit. Check the exclusive insurance link in the description below. Finally, we have Nationwide. Nationwide stands out with its Smart Miles Paper Mile program. If you drive less than 13,000 miles per year, this program can save you up to 30% compared to traditional car insurance. That's a huge benefit for drivers who don't put a lot of miles on their car. Nationwide also has Smart Ride, a telematics program that rewards safe driving with discounts up to 40%. The advantage is that they offer some of the lowest average premiums for full coverage, even with bad credit. The downside is that their minimum coverage premiums can be higher than average, and their customer service scores aren't as strong as Amica or State Farm. Still, for low-mileage drivers with bad credit, Nationwide's programs are some of the best in the market. Now, let's talk about why bad credit matters so much. Insurance companies in most states are legally allowed to use your credit-based insurance score to calculate your premiums. They do this because actuarial studies have shown that people with poor credit are statistically more likely to file claims. So, if your FICO score is below 579, you're already classified as high risk. In fact, Bankrate found that drivers with bad credit pay 118% more for full coverage than drivers with excellent credit. That's brutal, but here's the key. You can fight back by choosing the right insurance company. Some insurers are much friendlier toward drivers with bad credit, offering discounts, flexible payment plans, or programs that actually help you save over time. Quick note here. Your credit-based insurance score is not the same as your FICO score, but it's based on many of the same factors like payment history, debt levels, and credit mix. In most states, insurers use this to predict how risky you are as a driver. For example, someone with a score of 770 or higher is considered low risk and gets the best rates. But if your score is below 500, insurers will almost always charge you much more. A few states like California, Massachusetts, Michigan, and Hawaii actually prohibit the use of credit scores in insurance, but in most of the country, it's still a factor. So there you have it. The top 5 best car insurance companies for bad credit drivers in the USA. To recap, Geico is best for affordability. Amica is best for discounts. First Acceptance helps high-risk drivers. Dairyland is great if you've had accidents. And Nationwide is perfect for low-mileage drivers. No matter where you fall, remember this. Just because you have bad credit doesn't mean you're stuck paying sky-high insurance forever. By choosing the right company and stacking discounts, you can save hundreds, sometimes even thousands, every year. Back in index pointing right, don't forget to check the exclusive links in the description below for the best current deals. If you found this video helpful, smash that like button, subscribe for more tips on saving money on insurance and personal finance, and share this with someone who's struggling with bad credit. Thanks for watching, and I'll see you in the next video.